Bloomberg Audio Studios. Podcasts, radio, news. And Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
On the economic front, we got some University of Michigan sentiment data today, just coming out at 10 a.m. Wall Street time. Not good. University of Michigan sentiment came out at 50.8. Consensus was 53.4. Last period, it was 52.2. This is the second lowest rating or measurement on record. Joanne Hsu joins us here, Surveys of Consumers Director at the University of Michigan. Joanne, put into context the numbers you guys reported today.
Essentially, we should think of this as very little change from April. Over the course of this year, we've seen consecutive months of very, very strong declines. This most recent one was a very small decline and essentially flat. But as you pointed out, this is a very, very low reading. Consumers continue to feel very dour about the economy. They're worried about the impact of tariffs on inflation and also the impact on unemployment. They're really worried about multiple dimensions of the economy. That was what they saw last month, and they continue to see dark times ahead.
And nearly 3/4 of the respondents spontaneously mentioned tariffs, and that topic crossed partisan lines. Can you tell us what you thought of that?
We've been seeing a rising share of consumers spontaneously mentioning tariffs. A few months ago, it was really a fairly small number of people, and now it's almost 3/4. It's cutting across partisan lines. It's really on everyone's minds. And at this point, consumers are really waiting for the other shoe to drop in terms of its impact on inflation. And it's not just the fact that tariff policies have come in pretty high, but it's also the uncertainty and instability of it. So following this most recent pause on some China tariffs, we saw a little bit of improvement, but it really wasn't enough to reverse the sour readings that we've been seeing for the last few months.
University of Michigan one-year inflation outlook. The consensus was 6.5%, which is an elevated number. It came in even higher than that at 7.3%. What's driving that?
Again, it's the uncertainty and instability of tariff policy. Consumers are aware that that inflation right now isn't necessarily reflecting those tariffs yet, but they're waiting. They're really bracing for the impact. And interestingly, the increases in both short and long run inflation expectations were very much being driven by increases among Republicans. So even those who might broadly be in agreement with the president's economic policies are quite worried that the outlook for inflation has worsened recently.
Joanne, thank you so much for that. Joanne Hsu, Surveys of Consumers Director at the University of Michigan. Again, some significantly weaker than expected outlook from the UMich survey. So we'll stay on top of that, of course.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Isabelle is sitting in for Alex Steele. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Some news coming out of the pharmaceutical space. Novo Nordisk is replacing its CEO amid increased competitions for its Wegovy obesity shots and a 53% decline in the share price over the past 12 months. Boy, these stocks are having a tough time. They did so well during the pandemic, and everybody's trying to adjust post-pandemic, it seems like. I'm thinking about United Healthcare as well. Mikey Shah joins us. He's a senior pharma and biotech analyst for Bloomberg Intelligence. He's in London. He's one of our really, really good analysts over there in London, one of the best in the city covering this space. He learned from an old guy, but he's the young guy. All right, Mikey Shah, tell us what's going on at Novo. Is it the CEO's problem, or do they have a bigger issue?
Yeah, I mean, they announced the decision today. Certainly unexpected by us. Seems a bit, abrupt in nature. Novo tends to be very steady in their approach, but they also take, a long-term approach to things. So maybe they think, Jorgensen can't kind of steer the ship in light of the challenges that they're facing and that they're due to face as well. As I said, there's been a bit of a turn in fortune since mid-24. Some of that's been market challenges. Some of that's been kind of pipeline execution. In terms of the market challenges, I mean, it's difficult to know kind of what the CEOs, how they were meant to kind of react to that. So you saw U.S. policy pressures, and then you also saw headwinds from GLP-1 compounding due to supply shortage. And then on the pipeline side of things, you had underwhelming results for CagriSema, and then you also we also had kind of reservations around Novo's oral obesity strategy. So that was heavily focused on peptides. They've done a series of deals recently which are now focused on oral small molecules. So that suggests that perhaps not investing sooner in that space was perhaps an oversight. And I think the move today, or the decision today, really reaffirms kind of perceptions that while Novo had the first mover advantage in obesity, they certainly have lost ground to Eli Lilly now, which looks like it has the stronger obesity offering out of the two players.
What's interesting to me is how he will continue as CEO for a period to support a smooth transition to a new leadership. Quote, Novo has only had 3 CEOs. How will this affect sentiment? Are people more optimistic and reinvigorated that, yes, maybe we can finally have a turning point? Or are they, you think, feeling a little bit more pessimistic because it sounds like they really have a good culture?
Yeah, that's the thing, right? I said that the timing seemed a bit odd. Novo is obviously, you're expecting an uptick in GLP-1 in the second half of the year as you see easing headwinds from compounding. So I think the timing's a bit weird. The last time they changed their CEO, they announced a successor at the same time. That was Jorgensen, so the switch between Sorensen and Jorgensen. Today, they're basically just saying that they're reviewing internal and external candidates, but the strategy remains unchanged. The fact that they say the strategy remains unchanged makes us believe that it's clearly an execution issue, and that the board and the major shareholder, which is Novo Foundation through Novo Holdings, have clearly kind of lost confidence in Jorgensen.
So talk to us about the just kind of what we're seeing in that weight loss drug market generally. Where are we in its development? And how's it kind of shaking out in terms of leaders in that marketplace?
Yeah, so I think Lilly now is the clear leader. It's got the better portfolio. It's got the more effective drug out there. What's going to be key going forward now is there's going to be a lot of focus on oral GLP-1s. So these fall into 2 categories. One, peptide, which is a large molecule, and then you've got the small molecule such as orforglipron. We think that orforglipron, which is Lilly's asset, that's clearly got the better profile when comparing that to Novo Nordisk oral semaglutide. That's in part because, one, it's probably easier to scale because of the type of molecule that it is, and 2, you don't have these kind of strict dosing criteria where you have to take it on an empty stomach, etc., which we think is a drawback to convenience. Now, we've seen kind of the difficulties in kind of scaling up injectable GLP-1s. We don't envisage the same issue with oral small molecule GLP-1s. So that would essentially allow kind of greater penetration of the obesity market.
The competition has definitely intensified, and Novo stock has more than halved in the past year. What about Trump's pharma tariffs? That looms over the company as well.
Yeah, I think it looms over Novo, and I think it looms over drug companies as a whole. Clearly negative, but also a source of volatility. There's no real detail on it, so it's difficult to kind of comment on the potential impact that these tariffs could have and when they're going to come in. And that's kind of commentary that we kind of heard over large pharma's 1Q results too.
All right, Mikey, thank you so much for joining us. Mikey Shah, he covers all the pharmaceutical companies for Bloomberg Intelligence over in London. We hired Mikey when he was a young associate. He did really well there. We promoted him to analyst. Did really well there. Got promoted to senior analyst. Now he's one of the senior folks in the city of London covering these big pharma companies. And it's just a great success story. And that's what Bloomberg Intelligence has had a lot of success with, which is identifying and nurturing young talent. And Mikey Shah is certainly one of those there. And that's a great thing to see.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Big trade in the world of media and telecommunications. Charter Communications, that's a publicly traded company, buying Cox Communications, which is a privately held cable company. $34.5 billion is the value on Cox. This is a huge deal, folks, and we want to get the latest. So we turn to Geetha Ranganathan, Bloomberg Intelligence Senior Media Analyst. Geetha, big deal. What does this do for Charter here? What's the rationale for Charter laying out this big trade here?
Yeah, absolutely, Paul. I mean, yes, we were expecting something to happen in the cable space. Remember, Charter right now, before this deal, is the second largest U.S. broadband provider with about 30 million subscribers. With this deal, what happens is they really they catapult to number one position, edging past Comcast and having almost 36 million broadband subscribers. And really the rationale for the deal, Paul, is that cable has been under intense pressure. So just a few years ago, cable completely dominated the broadband landscape with about a 67% market share. They have been losing share to the telecom players, the Verizons, the T-Mobiles, and the AT&Ts of the world, because those players have come out with a much cheaper broadband solution with what is known as 5G home internet or fixed wireless access, which is priced about 20 to 30% lower than a cable broadband product. They've also been ramping up their fiber rollout. So cable kind of really facing it on both ends of the spectrum in terms of competition. And this is really just about them kind of gaining scales and better efficiencies and operations.
So they've had talks about this more than a decade ago. And to many people's point, this really isn't a surprise. What changed in that horizon? Like, why was it not pushed through before? And why are we seeing it happen right now?
I mean, there have been multiple things. Regulatory concerns have obviously been, one of the foremost issues for the cable space. Remember, I think just less than 10 years ago in 2016, Comcast tried to buy Time Warner Cable, failed in that transaction, and then Charter went ahead and then acquired, Time Warner Cable. So regulatory issues have certainly been, front and center. And I think, right now, the stimulus for this was really the fact that the cable industry is kind of facing all of these challenges from the telecoms, intense competitive challenges, and I think Cox really saw this as a really good strategy for them to exit.
All right, so this begs the question, and you mentioned it earlier. What does Comcast do here? Is there a response here from Comcast? Is there a strategic response here?
So Comcast actually already has a deal kind of in the works in terms of their spin-off of their cable network. So that's on the media side of the business. That's not on the cable side of the business, but they are spinning off their cable networks. That should happen sometime a little bit later this year. And the expectation, Paul, has been that once that deal happens, once they spin off that cable networks division into its own entity, that will become a roll-up for many other networks, most notably, the Warner Brothers Discovery networks, maybe even, a smaller AMC networks. So really, there's been a lot more chatter for Comcast on the media side rather than the cable side, but we'll have to wait and watch.
When it comes to antitrust, do you think that it helps that Charter-Cox deal isn't a big tech company? Because we know that competition officials, even Vice President J.D. Vance, have really closely looked at that space.
Yeah, I think that definitely helps. Also, remember, this is, there is absolutely no overlap in terms of their footprint. Cable is a very regional business. So again, this does not in any way hamper competition. It's actually good for consumers. And the one thing that, the Charter executives kept mentioning on the call was, they are basically going to create more jobs in America. So this is, good overall. So definitely, just kind of given the size and scope of the transaction, we don't really expect any big regulatory pushback.
All right, Geetha Ranganathan, thank you so much. We appreciate that. Geetha Ranganathan, she covers all the media companies for Bloomberg Intelligence. She's based in Princeton, New Jersey. Again, a big deal. Charter Communications, CHTR is the ticker, buying privately held Cox Communications for $21.9 billion equity value. There's also a lot of debt in there, so the enterprise value is much higher. Big transaction that the folks down in Atlanta, the Cox family, have been a long-time family company owning a wide variety of media assets, newspapers like the Atlanta Constitution, radio stations, TV stations, cable, amongst other things. So this is a big, big transaction for them. They are getting out of the cable television business, and they're considered very, very smart operators. So that tells you how tough that business is, and when they're saying they cannot compete with their scale. So a big transaction in that space.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Hey, it's been a good week for Boeing. First, you got a whole slew of orders, including their biggest order ever coming out of the Mid-East. So a good revenue potential backlog for Boeing. And then today there's reporting, and we're staying on top of it, a couple of sources. Reuters says that Boeing is in a tentative deal to avoid U.S. prosecution, and the Wall Street Journal reporting that the Justice Department wants to spare Boeing from a guilty plea over 737 MAX charges. So again, a potential really good piece of news for Boeing. The stock's unchanged on the day, but it is up 15% year to date at a 52-week high. George Ferguson joins us. He covers the airlines, the aerospace companies, including Boeing. Hey, George, this seems like a big deal to me. How do you read it?
Yeah, so I do think it's a good situation when Boeing can avoid a felony conviction, which I think ultimately was going to happen here before the Justice Department, I guess, sort of stood down or didn't care as much. And so, there was a lot of questions, I guess, about whether or not a company that had been convicted of a felony could be a government contractor. I mean, my personal opinion was that Boeing was just too important to the defense industrial complex to not be allowed to be a defense contractor. And so the Defense Department would have found a way around it. And maybe that's, one of the reasons for a little bit of indifference in the marketplace right now over it. But I think in the long run, it is a really, I think, good thing for the company to avoid having to be considered a felon.
You made a good point that if you're a felon, you can't really have government contracts. Critics would say that maybe the current administration probably had an influence on this. What would you respond to that? And it's probably hard to ignore, given that, for instance, President Donald Trump said that Boeing had some headaches, but it makes one of the best planes, quote, in his remarks when he was at the UAE.
Yeah, I mean, it does feel that way to me. And again, I think the challenge here is, look, Boeing did have some problems, clearly, with the 737. And, they were supposed to put in place an overseer that was going to help fix those problems. I think there's a lot of focus on the company right now. And I do think it's probably in the country's best interest not to impede its ability to be a contractor, again, to DOD and to other parts of the government. And so, look, in the long run, I don't think we need the felony conviction in order to make sure the right thing happens at Boeing. And so,
George,
I wouldn't throw too many stones on this one.
With a little bit of a hindsight here, put into context Boeing's week in terms of orders. How big was it?
Yeah, no, it was a nice week. So we expect more of this to come. I really think as the administration goes out and focuses on trade with the world and balance of payments, that countries around the world are going to look for ways to equalize that. And Boeing is one of the most important exporters for the U.S. And look, and we have a report on the Bloomberg Terminal about this, right? Their sales recently have definitely lagged, right? I think as customers have watched the problems at Boeing, watched the quality problems, the problems ramping up production. And so there probably is already a natural spring back for a pretty decent order year this year. Because again, I think some of those core customers, they haven't moved on. They're not going to buy Airbus. Their fleets, a lot of their fleets are primarily Boeing. So they want to buy Boeing. It's in their best interest to buy Boeing, but they just didn't want to get in the order book right now because it was such a mess last year. So I think that spring back coupled with an administration that's going to go around the world and say, hey, what are you doing to balance payments with us? And when countries go, I don't know, I guess we're off sides, the administration shows them, I guess, chips and Boeing airplanes, and they go, okay, we'll take a bunch of Boeing airplanes anyways. I think, you're going to see again more of this. So it was a good week, but I think there's more to come, and there's a spring back as well involved here.
30 seconds, George. What's the run rate today on 737 deliveries, and where does it need to be?
In April, we think mid-20s going through the factory. I think that's pretty good. We'd like to be seeing mid-30s by mid-year, and we think they ought to be able to break 38 by end of the year for 737.
George, excellent. Appreciate you coming on short notice. George Ferguson covers airlines and the aerospace companies for Bloomberg Intelligence.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.